Welcome back to another weekly market and financial update. So, last week was a bit of a turbulent week, right? We had a few folks calling in, and for those of you that did, thank you so much. We always appreciate feedback from everyone calling in, expressing their concerns and sharing their thoughts with us. It's great continuity for us, great continuity for you as well. So, again, anyone who called in, we always appreciate the feedback. So, again, as a reminder, last week what happened? Well, it was really almost 2 weeks ago now, where the Friday before last week, the jobs report came out and the job data was weaker than expected by a significant margin. And the markets reacted pretty poorly to that, right? So, pretty much leading up throughout the year, overall, the news and sentiment had been quite nice, quite strong. And until that data came out and the news report was released on the jobs data being relatively weak, that's when things really started to change. So, again, as a reminder, news can be quite quick reacting, and we saw that. If you're looking at the market, really since that news came out, again, another piece of data came out a few days after that, the following week, saying that the jobless claims actually looked okay. So, again, there's somewhat of a balancing act when it comes to data and reports and how the markets react to those data points. So, knowing that these facts are here, I just want to talk a little bit about market volatility and what happens from a historical perspective, just to give everyone an idea of what volatility can look like in any given year. It's always nice when the market is having this great bull run, and it's very easy for us, I think, to forget and say, okay, the markets are doing so well. No bad news has really come our way in quite some time. So I'm just going to put that to the back of my mind and pretend that bad news isn't going to happen ever again, right? So, sort of a little bit of a challenge there just from an emotional perspective. But historically, let's look at some of the facts. So, in any given year, there's typically a pullback of about 5% or more on average 3 to 4 times a year. So, keep that in mind, right? Markets will have pullbacks regularly 3 to 4 times a year. If there is a market dip greater than 10%, on average, this happens about once per year and very, very normal, right? Pullbacks, corrections, whatever they might be, tend to be very, very normal. Corrections are considered 20% market dips or greater. And really, then any bear markets would be anything sort of be really in the deeper end, deep zone there beyond that point. But just know that, 5% dips, 10% dips, these events do happen and they occur on a pretty regular basis. Again, think about at least once a quarter, right? Every 3 months, roughly, you should expect the markets to pull back. Then again, this is just a historical average. This is not to say that, we can expect every quarter the markets will have a pullback, moving forward, right? Because that's not how markets work. I'm just letting you know from a historical perspective what happens. That way we know from an emotional perspective what to expect. And I think these data points can help us better understand how markets move to help us all make better investment decisions with our portfolios. And it helps us at Vision Retirements to work with each and every one of you, our clients, anyone who is considering working with us, to provide them with the advice and guidance that you all really need to help navigate through some turbulent times in the market. So, knowing this, right, we know the election is coming up in a few months, and the Fed, in addition to the election, the Fed's intent has been to slow down the economy. So, knowing that there was a pullback last week, I do expect there to be some additional volatility and pullbacks throughout the latter of this year. It would not be a surprise to me whatsoever. So, if you're noticing some volatility within the markets and some pullbacks, just know that the Fed is really planning on this. And the reason, again, for that is because they're trying to manage inflation as best as they can. They want the economy to slow down so they can feel more comfortable starting to do rate cuts. And as they do rate cuts, the economy and activity should start to improve, but they want to prevent it from improving so quickly that we're back in an inflationary environment all over again. So they're doing somewhat of a balancing act. I think what they're doing is actually pretty strategic. I personally think that their plan is working well. We can talk a lot about them not, raising rates too quickly when the inflation first started, but again, unfortunately, that is behind us. So all we can do is really look forward at this point. So knowing the election's coming up, just a reminder to everyone that volatility is probably here to stay. Again, I personally expect there to be some volatility throughout the remainder of the year, and we're going to see how that will play out. Fortunately, the U.S. economy and a lot of corporate earnings looked really, really good this season yet again. So we know that U.S. companies are performing well, which is always great to see. So there will be some mixed data points in terms of. I got a few questions over the last week saying, "Hey Ben, are we in a recession? Are we heading towards a recession?" I think that's pretty unlikely. I mean, nothing is guaranteed, as we know, right? It very well could happen, but I think the chances of a recession are very, very low. And I think we are transitioning toward that soft landing that we've sort of been talking about over the last year and a half at this point. So, again, with all those facts in mind, just know that volatility is here to stay for the next few months. We're doing what we can at Vision Retirement to help mitigate some of these risks. And of course, anyone that wants to speak to us, like I said, we had a few folks reach out to us and just ask some questions. Everyone is always welcome to reach out to us at any time. That's what we're here for. So please utilize us as your resource. And again, stay healthy, stay safe, and we will touch base next week. Enjoy the rest of your summer.